Good morning, everyone, and welcome back. Happy start of the week. Let's begin with this new appointment with the morning briefing. Perfect. Let's do a recap, a little bit of what happened over the weekend. In short, as we know, we are in a period of trade wars. So we always need to be on alert, especially on weekends. In short, news often comes in. This time it was Trump's turn, who has momentarily suspended the tariffs towards China regarding technological goods. So not only iPhones, phones, but also everything related to LEDs, so everything that is technological. This, of course, gave a nice boost to the Nasdaq at the opening in short. The problem, in my opinion, is only postponed because obviously this is a suspension. Then in 1 or 2 months, probably all these issues will come to a head, and we will then see what the further developments could be. The mood is always the same. We must remain attentive, vigilant, and be ready to change course based on what they are. This is this sequence of events that then change, in short, the scenarios on the table. Having said that, from a macro perspective, today there are no important data. Then tonight we start with the first quarter of financials with Goldman Sachs. Then during the week, the luxury sector will also arrive. So there will certainly be some interesting weekly developments. From a macro perspective, I don't think the data is particularly interesting, also because all the macro data that will arrive will come in the wake of what happened with this trade war. So in my opinion, they will be not very indicative of everything that happened afterward. The data that will arrive, of course, is based on the data collected over the last 2 months, which did not yet take into account everything that has happened in the last 10 to 15 days. So in my opinion, they will have little impact on the markets. Having made this brief introduction, it is definitely important to keep an eye on the inflation sector. As far as, in short, at the macroeconomic level, the Fed pays particular attention to this data. There have also been many confirmations from all the interventions of the Fed board members. So certainly the focus is directed on inflation and the goal of keeping it low. In contrast to the equities, which have somewhat recovered, there was the smug major dismantling as a consequence of all these tariffs on large positions, in short, of carry trade. In short, so much so that even on the basis, on the currencies, we have seen the dollar literally collapse compared to, in short, other currencies. So an entire scenario that is absolutely not yet defined, and that will certainly offer many operational insights, but you really need to be very, very careful because things can change at any moment based on what they are. Then, in short, the data that comes in, but especially the decisions that are made by those who govern us. Let's now move on, in short, to see a little more from a technical point of view. Let's start with the Nasdaq, looking at a 4-hour time frame. So we have recovered a little bit. Let's say some of that decline, in short, from where we started. We are essentially at a level that we can define as the watershed almost level. The watershed, in short, let's say of 19 and 19.2. The first is the initial obstacle. Then certainly the major obstacle is the area between 20.1 and 20.3. It is probably the area where sellers will definitely reappear, in my opinion. Massive, probably, in short, following this push due to the suspension of tariffs on technological products, we might witness a further upward push in the stock markets, maybe during the middle of the week. However, I repeat, The key levels to surpass are still a little higher, and in short, they are those of obstacles. On the downside, obviously, we need to monitor the entire area recorded in short in the past weeks. So with these lows here to monitor, there is something for today from a more detailed operational point of view. We had an opening gap. As a result of this situation we described, we are working above red one. In short, there could probably also be a return towards HV at the opening to close the gap, and then perhaps a continuation upwards. We will see what the subsequent developments might be afterwards. I repeat, the volatility is slightly decreasing. We have already noticed in the last 2 days that the swings are becoming less and less wide. In short, a situation that tends to normalize a little, and especially as a result of this truce, let's say temporary. Regarding tariffs, we might witness, in short, a recovery of the stock markets. We will see what the operators' interpretations will actually be. Okay, having said this, for the Nasdaq, let's move on to a similar situation. We are also working here between RD0 and RD1 above the BC3 levels of Friday. The situation seems to be looking upwards. It's now 9:25, so the European markets have just opened. We are working close to 1, so there's a good chance the scenario could repeat itself here as well. In short, I repeat, the dividing line is this red line. In short, it's always drawn there. We've placed it multiple times. We have referred to it multiple times. We are looking at it on a 4-hour time frame. This is to have a greater reference. Here it is. So this is the first area to pass through in order to then reach here. 5.6, 5.720, which is the next even tougher one to pass. Obviously, once this is passed, there would be just 5.8 and 5.5, which is certainly an important pivot point. But I believe that the first two obstacles are these ones to pass. Obviously, on the downside, just like for the Nasdaq, we need to monitor the downside area, which could also be easily retested depending a bit on the news that will come. In short, I may be repetitive, but unfortunately, we live in this scenario and we have to adapt. From a more detailed point of view, let's also look at S in more detail. In short, a situation similar to that of the Nasdaq. We are between RD0 and RD1. So here too, in short, a situation that could reoccur with a test. Perhaps here's this level BC3 with even a test of HV and then a real restart. Or maybe linger in this area and then make a direct upward surge. We know that we have to look at what is in front of us. At the moment, the situation is that there is a bit of a recovery. In short, following the news from the weekend, let's also look at the other two American futures that we follow. Let's start with the Dow Jones, which also had a significant downward spike here this evening. Frankly, I wouldn't know why. Probably following the release of the Chinese trade balance data. Released last night that obviously surged upward due to the large export caused by the implementation of these tariffs, and so all the companies rushed to secure the last supplies without tariffs, and so this led to an explosion of this data. The Chinese export data released this morning probably harmed a bit the companies that are part of the industrial sector of the Dow Jones. However, even so, in the end, there was just a spike that subsided. We are also working here more or less at the levels of yesterday evening's opening. So we are monitoring these levels here with RD1. In short, the rise to the 41,000 zone is definitely the one to surpass. And then we have 42,000, which is certainly the major obstacle. On the downside, we are monitoring this range, which is very well defined between SD0 and SD2. A break of this range obviously could bring prices down to the minimum range and confirm a low that was recorded last week. Obviously, these are all scenarios we need to keep in mind. Then we need to immerse ourselves, in short, based on how developments unfold. Let's look at the Russell. It's a bit more compressed compared to the others. We are working right above the level, HW. In short, it has had a nice recovery. In short, on Friday, a similar situation here. 1900 is definitely the first obstacle. Then we certainly have these highs here. A moment more, a cut, these highs here for sure, so 1950. But you can make an attempt at this area here, which is the 2000 before the 2000, which is this one here. Let's take a look at it just a moment, this one too. Here it is. The real obstacle is this one at 2000 in short, corresponding to all these lows here. Here it is. This whole area here is the real obstacle. Between the 1985 and 85, 2000 is the first. And 2000, it's the first obstacle to overcome for the RAS. Let's also take a look at the DAX. Obviously, here it is. Here, in short, it picked up a little bit of momentum this morning, even though it then corrected right at the opening it too. In short, it leaves. In the wake of this tariff truce, which certainly many companies, including European ones, can benefit from, but as I said, the situation seems to be somewhat eclipsed for Europe in the sense that the spotlight is more focused, obviously, on the United States. Europe is certainly less interesting from an operational standpoint. Let's also look at CL, the oil. Here it is. It has recovered that important area of 61.50. We are working right on it, so the holding of this area could be precisely between RD0 and SD1. SD0 of this range, but also SD1 essentially, which is an even better pivot point, so between 60 and 60, 61.90. This is the area in short where we might see some trading range. A breakout to the upside could definitely bring prices to the 64 area. And indeed, a break of SD1 could certainly bring prices to SD2 for a test of this entire low zone with possible spikes down to the lowest point. Then in short, new scenarios open up again. As a result of a possible recession, etc., which at the moment seems to be somewhat averted. We will then see what the developments of the rebound will be. In short, all of this has all this uncertainty. Obviously, gold continues to sail with full sails. In short, on Friday it recorded new all-time highs. In short, there are some investment firms that even predict it at 4,500 by the end of the year, frankly. It seems a bit excessive to me, but they might have data, studies, analyses, their projections, such as to suppose targets of this magnitude, possibly because they foresee, they probably hypothesize scenarios of recession, of severe economic crisis. Therefore, as a consequence, this would become a safe haven again for them, which would probably push it towards these extremely ambitious targets. We will see if these investment firms are right. Let's take a look at X and PIGS. As we usually do, we always look at it on that 4-hour chart that we have looked at over and over again. We are still there. We have recovered about 50%, which is this area here, so 5.5 and 15. We should, if we manage to recover this area here, then there could be a recovery up to this area here, where I expect the reappearance of sellers in a significant way. Obviously, the obstacle, it's always this first. Well, at the moment, we can absolutely frame this as a rebound, just like for the Nasdaq and for example. And so we will need to understand. Then, if based on these new, these new statements regarding tariffs will lead to, new benefits and new growth prospects, we will see, what developments may occur, as always. Maximum attention. Today is Monday, so let's try to start the week well. we have reached the end of this morning briefing. Bishon will obviously be in touch afterwards in the chat. I invite you, as always, to leave a like on the video, and thank you all for your attention.